Hello everyone, this is Pammy Jaiswal.
Hi, this is Payal Agarwal.
Today, we welcome all of you to our second episode of the Saaraansh Series on SEBI laws. Today's episode, we are going to discuss on the timeliness and relevance of flow of information in a listed entity.
So generally, a lot of buzz is created around the external flow of information, given SEBI mandates external flow of information and prescribes a compliance framework for the same under the listing regulations. While we will be discussing the same in this episode, we would first like to touch upon the relevance of internal flow of information, which is very important to ensure that the authorized KMPs are informed of the matters that require external disclosures within the prescribed timelines.
Right, being well informed helps in quick decision making and at the same time fosters an environment where the employees can feel aligned with the business goals. And internal flow of information is one of the prerequisites to that. However, from the compliance perspective, external dissemination of information requires much elaborate discussion and action because the listing regulations specifically provides for strict pre and post event or information disclosure requirements along with the regular event disclosure requirements under the listing regulations.
Coming to the pre-intimation requirements under the listing regulations, the regulations require disclosure of certain board proposals well in advance. These proposals pertain to matters such as consideration of financial results, decisions with respect to buyback of securities or bonus issuance, declaration of dividend, or fundraising through issuance of securities, etc. As we may understand, these proposals are information which may be price sensitive in nature. That is to say, once accepted, these proposals will have an impact materially on the price of securities of the listed company. Hence, an advance notice helps in maintaining an efficient market, prevents insider trading, and also assists stakeholders in having an equal access of information. The regulations also prescribe certain timelines for making these advance notices available to the stock exchanges and hence to the general public. Most of these proposals are required to be intimated to the stock exchanges at least 2 clear working days prior to such meeting. However, when it comes to the consideration of financial results, the same is required to be intimated at least 5 clear days in advance. A proposal with respect to alteration in the form or nature of listed securities or any alteration in the redemption date or payment of interest date with respect to a debenture, bonds or redeemable shares are required to be intimated at least 11 clear working days in advance.
Right, now moving to the post-event intimation requirements. Now the material events and information pertaining to the listed entity under Regulation 30, they require even a more elaborate discussion. Now what is material is subjective. However, if you look at the listing regulations under Reg 30 Red Schedule 3, it provides for a long list of events under various categories. Now the intimation under this regulation has to be given with this understanding that whenever after you've given the intimation there is any material developments for the said event or information, such material development also requires a subsequent intimation to the stock exchanges within the prescribed timelines. Now coming to the first sub-part of the post-event intimation requirements, that is the deemed material events provided under Part A, Para A of the listing regulations. These may include any sort of acquisition, disposal, entering into contracts or agreements which are not in the normal course of business, or agreements which are executed to have an impact on the management and control of the listed entity, frauds, default by the listed entity or its directors, KMPs, etc. So these sort of events and many more under the said list under Schedule 3 Part A, Para A does not require any test of materiality. That means once these events have taken place, you have to inform them within the prescribed timelines to the exchanges. And second, we come to Part A, Para B events under Schedule 3 under Regulation 30, which are events not deemed material events, but they are to be tested against the thresholds of materiality. Now till June 2023, there were only qualitative thresholds to determine whether an event is material or not. And SEBI observed that many companies are not informing even those events which otherwise should have been informed as a material event. And accordingly, it came up with amendments under the listing regulations and brought in quantitative thresholds in addition to the qualitative thresholds under the regulation 30/4. Under these thresholds, the first is a threshold linked with the consolidated turnover, the second is consolidated net worth, and third is the consolidated net profits. The first two is linked with a percentage of 2% of your either consolidated net worth or turnover, and the third, that is your third parameter on the net profits, it is 5% of the absolute value of the net profits. In the first two cases, we're talking about the preceding financial years. As for the preceding financial years, whatever financial statements you have, consolidated financial statements you have to take the figures according to that. However, in case of profits, that is net profits, you have to take the preceding 3 years average. Right. In fact, Payal, before you start, I think there's also very important that the information which goes under this regulation has to be containing all the contents which are given under SEBI's circular issued in July 2023, and that's a strict adherence, that's a strict mandatory requirement which the entities have to ensure.
Okay, and as we were discussing about the materiality thresholds under the listing regulations, but I would also like to state this, that the thresholds when it comes to the average profits of the entity, the same is required to be seen on an absolute basis. That is to say, irrespective of whether there has been a profit or a loss in the preceding 3 financial years, each of the 3 figures have to be taken and added up to derive at the average profits for the materiality threshold.
Right.
Similarly, when it comes to the threshold under net worth, if the net worth is negative during any financial year, the same has to be avoided for the purpose of materiality threshold determination. These materiality thresholds are required to be evaluated against the impact in terms of value, the expected impact in terms of value, or the actual value of the event or information in consideration. While the actual value is something that the listed entity will be well aware of, when it comes to an expected impact in terms of value, the same needs to be assessed on the basis of the likelihood of the happening and triggering of such materiality threshold. Moving further, these material events intimations are required to be given within a prescribed timeline. If the event or information is decided in a board meeting, the same is required to be intimated within 30 minutes from the conclusion of the board meeting itself, irrespective of which event or information are we talking about. If the information is something which was generated inside the listed entity, the same is required to be disseminated within 12 hours to the stock exchanges, and if the information is generated outside the listed entity, the same is required to be disclosed within 24 hours from the occurrence of such event or information. Not only this, the material information that pertains originally to the subsidiary of the listed entity but has a material impact on the listed entity, the parent listed entity, is also required to be disclosed to the stock exchanges.
Absolutely. Now coming to the third part of Schedule 3, which is Part A, Para C and Para D. Now both these paras talk about the residuary powers entrusted on the authorized KMPs to decide whether any event which does not categorically fall under Part A, Para A or Part A, Para B to be determined as a material event and require an intimation. For example, there is an emergence of a new technology, or there is expiry of a patent which is material for the listed entity. In such cases, the authorized officers of the listed entity are required to determine. The board is authorized, and which of course the board in turn authorizes, subdelegates it to the authorized KMPs to decide which all events can fall under the category of a material event. In fact, for these purposes, listed entities are also required to frame a policy on determining material events which can contain anything in addition to whatever other current requirements under the listing regulations, but that should not be in the nature of diluting the requirements under the listing regulations. In fact, this policy should also assist the relevant employees in identifying the potential material events and inform or maybe place the information up to those authorized KMPs.
Right. So here again comes the link between the internal flow of information helping in turn in the external disclosure of information. With this, we move ahead with the third and the last segment of today's episode, which deals with the regular periodic filings with the stock exchanges. So as a listed entity, the entity is required to keep their stakeholders informed of all developments or various important information about the entity on a regular basis. And therefore, the listing regulations require the listed entities to intimate certain information on a quarterly, half-yearly or annual basis. Quarterly filings include details of the shareholding pattern of the listed entity, the quarterly financial results, corporate governance report or investor grievance redressal statements, etc. The statement of related party transactions is required to be filed on a half-yearly basis to the stock exchanges. The listed entity is also required to intimate certain information on an annual basis, which includes affirmation with respect to timely payment of fees to the stock exchanges or maintenance of proper share transfer agent facilities, etc. With this, we conclude our today's episode on timely flow of information. We hope this would have helped the viewers to understand the relevance, intent and necessary compliances with respect to the timely flow of information. In our next episode, we'll be dealing with the related party transactions.
Yes, on the related party transactions. That would be the third episode of the Saaraansh series. And yes, I was little in a hurry to say thank you to all of you. So again, thanks
For listening.